President talking about that economist. He told us that he does think panic buying could happen in the near future, although that's all speculation on his part, but he thinks it is a possibility. Talked to customers here at Costco, though, and they say they're not worried about panic buying, at least not yet.
Carting away like normal, but for how long? At Costco and Shoreline, many shoppers told Como they worried more about the result of panic buying than the pumped up prices.
Or just like an extra luxury item. It's not really necessary.
If you were smart enough, you would have already been prepared and have non-perishable foods anyway.
Costco has made headlines recently with its latest earnings report, sending shockwaves through Wall Street. The retail giant appears to be facing alarming trends that could spell disaster for the broader economy. Investors should take note. The company's CFO has stated that consumer behavior is shifting dramatically as inflation continues to erode purchasing power across all income brackets. Costco, known for its bulk products at competitive prices, is experiencing changes that are concerning. Costco operates over 850 locations worldwide, with 591 stores in the United States. For decades, it has built a reputation for delivering value and stability through economic ups and downs. However, even a company as successful as Costco is now showing signs of stress in this economy. In its quarterly earnings report for the second quarter of 2025, Costco revealed that revenues increased by 4.2% year over year. On the surface, this seems positive. However, the same-store sales growth was only 1.7%, falling significantly short of the expected 3.5%. This discrepancy led to a 5.8% drop in Costco's stock in after-hours trading. The CEO of Costco highlighted significant changes in consumer purchasing behavior during the earnings call. Customers are now gravitating towards essential items, demonstrating price sensitivity even within Costco's value-oriented model. The data shows a decrease in shopping cart sizes and a notable shift away from discretionary purchases. This trend is alarming. It suggests that even consumers who typically rely on value retailers are becoming more cautious with their spending. Why this shift? The rising cost of living is a major factor. According to a recent survey by the National Retail Federation, 72% of consumers view warehouse club memberships as an economic necessity rather than a convenience. This change indicates that consumers are increasingly dependent on these memberships to manage their household budgets. Even within this value segment, 58% of shoppers reported purchasing fewer non-essential items than they did 6 months ago. This is a clear indication that people are tightening their belts. Costco's membership fees remain competitive. A basic Gold Star membership costs $60, while the executive membership at $120 pays for itself with 2% back rewards for frequent shoppers. Yet the reality is that even Costco shoppers are cutting back on discretionary spending. This trend is concerning for the economy as a whole. The retail industry has been struggling for some time, and Costco's troubles hint at broader issues. Another major retailer, Bed Bath & Beyond, recently announced store closings. After emerging from bankruptcy, they are closing another 45 locations nationwide. This follows a significant decline from over 1,500 stores to fewer than 350. The closures are attributed to slow sales, changing consumer behavior, and the need to cut losses. When even successful retailers like Costco begin to struggle, it serves as a warning sign for the entire economy. Costco is known for its high revenue per square foot, yet it is facing challenges. A decline in foot traffic by 2.3% compared to the same quarter last year is particularly alarming. This marks the first decline in nearly 4 years. Costco's executive membership renewals, although still high at 90%, have fallen 2 percentage points year over year. This decline suggests that even loyal customers are reassessing their spending priorities. Membership fees account for approximately 75% of Costco's operating income. Therefore, a continued downward trend in renewals could significantly impact their bottom line. When a value retailer like Costco experiences changing consumer behavior, it often signals deeper economic issues. Costco's customer base spans all income brackets. However, they share a common trait. They are value-conscious consumers. When these shoppers pull back, it indicates widespread economic caution that will likely manifest across other retail segments. These shifts have only been occurring for a quarter, and we have yet to see the full effects of this economic downturn. In addition to Costco's struggles, major corporations across various sectors are announcing significant layoffs. Intel is laying off 15,000 employees, roughly 15% of its global workforce. Goldman Sachs has cut 3,200 positions, and Hasbro has also eliminated jobs. These layoffs will have a ripple effect throughout the economy. Retail employees may not be the highest income earners, but they represent a vital piece of consumer spending in the country. Best Buy has announced layoffs of 3,500 workers from its retail locations. The company has been experiencing quarterly sales declines for several quarters. These layoffs are seen as good news for the stock market. Each time a company announces layoffs, their stock price often rises. Investors are excited about the prospect of reduced overhead costs, which can lead to increased profits. Other retail brands have also announced layoffs recently. Gap Inc. is laying off 400 corporate employees, while Walgreens plans to close 1,200 stores over the next 3 years. These announcements paint a bleak picture of the economy. Consumer confidence has taken a significant hit, marking the largest monthly decline since August 2021. People are becoming increasingly worried about inflation and job security. The Consumer Confidence Index has declined for 3 consecutive months, indicating that consumers are beginning to realize that the economic situation is not as rosy as it once seemed. Just a few months ago, economic optimism was high, but now that optimism is evaporating, this shift should not be surprising. The trajectory of the economy is leaning towards downturn, and it may worsen before it gets better. According to the Conference Board, consumers are pessimistic about future business conditions and less optimistic about their income prospects. This sentiment is backed by the trends we have discussed. People have little faith that inflation will subside. The Federal Reserve is closely monitoring inflation, but their efforts to combat it have been largely ineffective. If they were working, we would see inflation rates closer to the target of 2%. Instead, inflation is resurging at a time when it should be declining. These expectations and fears directly impact consumer spending. Some economists argue that we shouldn't panic just yet. They suggest looking at trends over time rather than relying on 1 month's data. However, today's economic landscape is different from that of June 2022. Back then, people were still spending, despite high inflation. Today, consumers are feeling the full effects of inflation and uncertainty, and this will likely affect their spending plans. Recent surveys indicate that a significant portion of the population plans to reduce discretionary spending due to economic uncertainty. This is a wise decision. Slowing down spending and starting to save more is in everyone's best interest. However, the irony is that as consumers hunker down, the overall economy suffers, leading to more job losses. This creates a spiral effect that is difficult to escape. As consumer behavior shifts, the value of the dollar appears less predictable. This uncertainty is affecting how people spend their money. Many financial experts suggest that individuals should focus on reducing debt. This will free up more cash for managing unexpected price volatility. Additionally, considering hard assets like precious metals and dividend-paying stocks can provide some inflation protection. These strategies can help preserve real wealth rather than just accumulating depreciating dollars. Surveys show that a significant percentage of older generations plan to cut back on spending. Unlike younger generations, these demographics tend to be more strategic in their financial decisions. The momentum has shifted towards a downturn, and the situation will have to play out accordingly. The best course of action is to prepare yourself and your portfolio for what lies ahead. Ultimately, protecting capital against inflation and potential market downturns is crucial. Diversification and cash flow investments are more advantageous than speculative growth in today's environment. Being ready for whatever comes your way is vital, as significant changes are on the horizon. In conclusion, Costco's recent earnings report serves as a crucial warning for investors and consumers alike. The changing landscape of consumer behavior, coupled with rising inflation and layoffs across various sectors, signals a troubling economic future. As individuals, it is essential to take proactive steps to prepare for these challenges. Whether it's reducing debt, diversifying investments, or simply being more cautious with spending. Everyone has a role to play in navigating this uncertain economic landscape. If you're concerned about your financial security and are thinking about investing, check out the first link in the description. It's the platform I use, Interactive Brokers. Click the link to learn more. We hope you found this video helpful. If you did, please like and subscribe to our YouTube channel.